Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Consumer price inflation fails to toe the RBI line, moderates marginally to 6.44% in February from 6.5% a month ago. Food price inflation also down just 5 basis points from last month. The U.S. government bails out depositors of the Silicon Valley Bank without bailing out the bank itself. More steps to stabilize the banking sector to be announced by President Biden tonight. HSBC buys the UK arm of Silicon Valley Bank for £1 backs all deposits, says customers can continue to bank as usual. Relief for Indian startups who bank with the SVB, but uncertainty ahead for 800 employees of the bank in its Bengaluru office. That's a BTTV exclusive. The Silicon Valley Bank debacle hits D Street sentiment. Sensex tanked nearly 900 points despite the rescue plan announced by the US government. Nifty down 259 points. Hyundai looks to buy General Motors' Talegaon plant, signs term sheet for potential acquisition, likely to make the plant a hub for its exports from India. It's been an excruciating 72 hours for the U.S. banking system, with the ripples being felt all across the world and Indian startups as well. 2 U.S. banks have gone under, one with assets of over $200 billion and the other with $110 billion. For some time, it seemed that a return of the financial crisis of 2008 was in the offing. But the U.S. authorities have stemmed the bloodletting for now.
The contagion started last Wednesday when Silicon Valley Bank announced it had sold $21 billion of securities from its portfolio and was planning a $2.25 billion equity issue to shore up its finances. The 40-year-old bank was facing classic run on its deposits along with a double whammy of rising interest rates. Tech startups that made up for most of its customers were facing a funding winter, forcing them to withdraw their funds from the bank. SVB, in turn, was forced to sell its U.S. government securities to cover these withdrawals. Meanwhile, the value of these securities had fallen heavily because of rising interest rates in the U.S. that have risen by 425 basis points in the past 12 months as the U.S. Fed goes all out to combat inflation. On Thursday, the shares of the bank plunged more than 40%. Trading in the shares was halted on Friday after a sharp sell-off in pre-market trading. The same day, SVB was shut down by California regulator and placed under the receivership of the Federal Deposit Insurance Corporation, FDIC.
The collapse of the Silicon Valley Bank came as a shock not just to banks all over the world but also to the global startup ecosystem. The bank was a favorite among venture capitalists as well as angel investors, so much so that they insisted that if startups want funding from them, they would need to have an account in the bank. The bank was just 40 years old and it rose meteorically. It had over $209 billion worth of assets before its collapse.
There was panic amongst the depositors, with the FDIC allowing withdrawals of only up to $250,000. Startups and other Silicon Valley players with accounts in the bank found themselves scrambling for funds to run their businesses.
There's concern that it may lead to uninsured deposits being pulled out of a lot of other regional banks in the same asset size or smaller and put into the largest commercial banks. And that could cause problems with these banks as well. But, you know, you also have the question of the impact on the financial technology and research and development, venture capital industries in the United States. There's $160 billion potentially tied up in this receivership that the venture capital industry could lose.
After facing massive flack for inaction in the first few days, U.S. authorities went into a huddle over the weekend and came up with a solution. By Sunday, emergency measures were in place to shore up confidence in the U.S. banking system. Authorities announced the depositors will have full access to their funds beginning on Monday. The Federal Reserve set up a new facility to give banks access to emergency funds. US banks will be able to borrow money from the Fed and not have to sell securities. These securities will instead be kept with the Fed as collateral for the emergency withdrawal. Importantly, the bailout will not extend to the bank itself, and importantly, no US taxpayer funds will be involved. On Sunday night, US Treasury Secretary Janet Yellen finally announced that the shareholders and certain unsecured debt holders will not be protected. She added that the senior management has also been removed. Meanwhile, US President Joe Biden tweeted all those responsible for the mess will be held accountable. He added he will soon address the banking crisis. The panic seems to have subsided for now, with several Asian markets, including India, recovering from the lows touched during the day. HSBC also announced its takeover of SVB's business in United Kingdom. However, uncertainty remains with another bank, the New York-based Signature Bank, failing due to similar reasons over the weekend. The bank had $110 billion in assets. Bureau Report, Business Today Television.
The collapse of Silicon Valley Bank in California could hit 800 employees working at its Bengaluru office. Though no official announcement has been made, employees are fearing the worst. Let's go across to Akanksha Chaturvedi for more on this. Akanksha, what are the possible scenarios which would play out here for these employees?
Well, right now, the 800 employees at Silicon Valley Bank India's operations are facing uncertainty as there has been no official communication so far. And what I find interesting here is the fact that several of these employees had misgivings regarding the rapid rate hikes by the US Fed to tame down inflation. Although these employees in the Bengaluru office couldn't do much, the CEO, the CFO, the CMO, as well as the general counsel of the company sold over $5 million worth of stocks just before this crisis became a big news last week.
And can they expect compensation? Because that's potentially what could be paid to employees in the US.
Yeah, well, it's unclear so far whether the Indian employees would also be required to work for 45 days and get 1.5 times their salary. This is what the US regulator, the FDIC, is asking employees in the US after taking over the bank. So far, the Indian employees don't have any such clear intimation or information. So they are facing a lot of unclear times.
Akanksha, thanks for joining us. Now, the steps taken by US authorities on Sunday to stem the bloodletting by the banking sector has come as a big relief to scores of Indian startups which were in business with the Silicon Valley Bank. The bank handled business of a number of startups as well as some of the biggest wineries in the San Francisco region.
The US president has promised more steps for the beleaguered US banking industry tonight. But the relief among the customers of the Silicon Valley Bank and New York's Signature Bank is already evident. Even as office workers across the US went home for a day weekend on Friday, news broke of the 40-year-old Silicon Valley Bank going under. The bank was immensely popular among the venture capitalists and the startups they funded. In fact, according to reports, some of the big startup accelerators like Y Combinator banked exclusively with the Silicon Valley Bank. Not only this, SVB was an investor in several Indian startups as well. According to startup data platform Traxin, the bank had invested in Paytm, Bharat Financial Inclusion, now owned by IndusInd Bank, Naptol, Bluestone, Genesis Colors and Carvale among other companies. That's not all. The situation is particularly dire for startups who banked with SVB. According to reports, at least 40 Indian startups have between $250,000 to $1 million each in SVB. Over 20 Indian companies have balances of over $1 million. Paytm's Vijay Shekhar Sharma was quick to clarify on the investments, saying the bank had already exited the company with handsome returns. Zerodha's Nitin Kamath also commented, finding wisdom in pessimism, saying the lesson from SVB or Yes Bank is to have funds, especially working capital, distributed across a bunch of banks. Capital Mind founder and CEO Deepak Shenoy also tweeted his relief over the step announced by US authorities. He added that the important thing was that systematic risks were controlled.
The FDIC, which is an agency that was established to instill public faith and confidence in the United States financial system, has stated that the main office and all branches of Silicon Valley will reopen from today, which is the March 13th, for insured deposits to get their insured money back. With video journalist Shivu, Anagha Keshav for India Today, Bengaluru.
And here's what else is making news in the corporate world. The Adani Group has fully repaid share-backed loans aggregating $2.65 billion well before the March 31st deadline. This includes a $500 million loan facility taken to finance the acquisition of Ambuja Cement. Earlier, in the past 1 month, the group has also prepaid loans worth 7,374 crore rupees, much before their maturity in April 2025. Hyundai Motors India signed a term sheet agreement to explore buying the General Motors plant in Talegaon, Maharashtra. The term sheet covers proposed acquisition of land and buildings, certain machinery and equipment for manufacturing at the plant. Hyundai added in a statement. According to sources, the company is likely to use the plant for exports. Yes Bank fell nearly 13% in trade today after a 3-year lock-in period for its investors ended. In 2020, 8 banks participated in RBI's rescue of Yes Bank with a provision of a 3-year lock-in period. This ended today, allowing investors to offload their stakes in the bank. The stock did gain an upward momentum for a while, but soon fell again, closing down about 5%. The Silicon Valley Bank debacle in the U.S. suppressed sentiment on Dalal Street as well, bringing the benchmarks down for a third straight session. All the Nifty sectoral indices were in the red. Sensex tanked 897 points. That's a massive 2,000 points in just 3 days of trade. Nifty down 259 points. On the list of gainers today, a handful of names: Tech Mahindra, Apollo Hospitals, Britannia and ONGC. That's all we had. On the downside, big hits in financials: IndusInd Bank, State Bank of India, Tata Motors, M&M and Adani Ports. The collapse of SVB has spooked Dalal Street. What impact will it have on investors and depositors in India?
How do you assess the impact of the fallout of SVB crisis on India, the startup world which is heavily dependent on SVB, and the Indian markets as well?
Yeah, good afternoon, Sakshi. I think, see, the Silicon Valley Bank bankruptcy is a very big kind of a problem for the US markets, considering that it was one of the top 15 banks in the United States of America. And I think the good news which came today in the morning was that Fed has promised that all the depositors in SVC will get all their money back. So I think there's not going to be any liquidity crisis as far as the depositors are concerned. Of course, investors who have invested in the equity of SVC are obviously not going to get anything. But coming to the to the bankruptcy crisis, I think 2 US banks going up, SVC getting bankrupt, Signature Bank also going bankrupt, is definitely not good news in the very near term. Sentiment has obviously got impacted significantly. The only positivity about this development is that the March 22nd Fed meeting may not see a very sharp rate increase what people were expecting earlier. Earlier the expectations were 50 basis points. I think what we are hearing now is possibly it could be a 25 basis point hike or maybe a pause as of now, considering that already a lot of damage has been done in the US economy. As far as the Indian markets are concerned, Sakshi, I think the startup companies, companies like Nazara Technologies have already mentioned it to the exchanges that their subsidiaries had about 64 crores in these companies, plus Paytm also clarifying that none of their equity investments are now held by SVC. So I think in the Indian context, the sentiment damage may be there, but in terms of the collateral damage, I don't think it's going to be a significant number. And I think markets are over amplifying the pessimism in the Indian equity market. So I think it's a matter of time before we see a gradual recovery to the stable zone.
Market flows and Indian market flows, how will that get impacted?
I think you're right. FI flows could get impacted in the very short term. And traditionally, Sakshi, you must understand that March has always been a very volatile month, not only from the point of inflows, but even domestic investors, normally square off their transactions, settle their accounts. So March is going to be a very volatile month. So we could expect, this kind of volatility or maybe some sort of underperformance or some sort of continuous selling in the market. Still, we can complete the month of March. Hopefully, from April onwards, I think things should settle down. And I think if there are no negative surprises, any further negative surprises, I think the market should definitely look at this positively. I think you will probably get a clear sense of this, after the 22nd Fed meeting, because the Fed will definitely pinpoint, what is the state of the US economy in terms of the banking sector, because, people definitely would not like any further negative surprises. That is very clear.
Inflation is stubbornly refusing to toe the RBI line. Figures released this evening show the consumer price index moderating just a little in February despite the tightening in the monetary policy. The CPI figure came in at 6.4%, just 8 basis points below the Jan figure of 6.5%. The food inflation clocked in at 5.95% versus 6% in January. The RBI has increased repo rate 6 times now in the past 10 months. That's a whopping 2.5%, trying to bring down the inflation rate to its target of 4%. The CPI clearly still remains sticky. My colleague Sakshi Batra spoke to Siddharth Sanyal, Chief Economist, Bandhan Bank, about the significance of the latest figures and the impact on the RBI monetary policy.
So we have seen the headline number coming down at 6.44%. Your take, was it as per your expectations?
Yes, actually, indeed, this is slightly softer than the previous print. We were expecting the number to be a tad further softer at around 630. Compared to that, this is slightly higher, but broadly in the same zone. So 10-15 basis points here and there, but broadly it's in the same zone. The important thing is that even though the number is slightly softer, it's a slightly tricky situation because this is again second consecutive month where the number is beyond the upper tolerance zone of the MPC.
All right, we are yet to get all the other figures as far as the breakup is concerned for the food inflation number. In fact, that is now coming at 5.95%. Now, this is just like a tad bit above the 5.94% number as well. Now, we do remember that, the month of February has been the hottest ever in the last 122 years or so. Could that have impacted this slight uptake? Is it, or was it expected to be lower, but it has actually jumped up on the back of the heat that we have seen and the impact perhaps on the Rabi crop? Your take?
Rather than looking back, I think it's more important to look forward from this point onwards. That not only February was the most warm month in many years, but at the same time it's very important that this time we are talking about an El Nino possibility this particular year, and that means there's a possibility of slightly less optimal rainfall during the course of the monsoon season, where the weather plays an even more significant role. My sense is that in the month of February, the Rabi crop, just because February was a little hotter than expected, it didn't really have so much of an impact immediately. But a much more important question is what is in store from particularly from May, June onwards for the next 4 months. I think that's very important because that will set the tone for the Kharif marketing season, Kharif crop season, or the summer crop, which is the main cropping season. I think that particular focus will be very important.
You also mentioned about the monsoons, and that's going to be an important factor that may determine the food prices going forward from here. Everybody has been anticipating the El Nino weather pattern that usually results in the below average rainfall, cutting yields, pushing up food prices. Now, in case that were to happen, as is the expectation by most of the economists and from the IMD and the weather forecast teams as well, what could be the likely impact on food prices? Could we need to brace up for a huge bump up right there?
Oh well, I'd expect that the impact may not be that severe if we get a relatively better spatial and temporal distribution. If it is concentrated in some of the months, especially during the sowing season or in the early parts of the cropping months, then it's possibly a much bigger problem. But it's the deficit, if it is say something like a 5-10% kind of a deficit, the impact is not that severe. We do have an early warning, so that should help the croppers to plan better. Also, we have decent amount of food grains in store. So if everything remains in terms of how they are being projected at this moment, I think the impact is relatively manageable. But the problem starts when the food, rainfall shortage becomes something like 5 to 10% is one story, and once it crosses that particular level, so 10-15%, then the impact is not really linear. So the key question is whether we have a relatively more even spatial and temporal distribution, and whether the deficit is capped within something like a 10%.
We've seen the Silicon Valley Bank collapse, really impacting the stock markets worldwide in today's trading action and over the last 2 trading actions as well. Will that have an impact on how the Fed will really move on rates? The kind of impact that we are seeing on the banking system, the financial system in US, is that getting also impacted because of the constant rate hikes, the aggressive rate hikes that the Fed has also been doing? And could that in turn have an impact on the RBI's move going forward too?
Certainly, Sakshi, as I mentioned a few minutes back also, that given that there is certain question marks at this moment about the functioning of some of the banks in the US, there is a bit of a question mark or doubts about how exactly the Fed stick to the course that they had indicated just a few days back. You rightly mentioned that on the basis of the inflation numbers, they wanted to be somewhat more hawkish, and they wanted to act a little more sternly. But at the same time, if there are more uncertainties about the stability of the financial system, typically any central bank would have to be a lot more cautious before delivering further rate hikes or liquidity tightening. I think to some extent Fed might actually would have to take that particular aspect into account. And there is no point, ignoring the fact that the Fed's measures and monetary policy steps had been having a huge bearing over the last several months over global rate trajectory, including most emerging markets, including India. So that way, if the large central banks go a little slow in terms of their fight against inflation down the course of about a week down the line, that would be very important indicator for all central banks, including the Indian central banks, also to take a note of. At the end of the day, each country's monetary policy is based on its own parameters, its own inflationary pressures, currency movement, and all other factors. But in today's situation, there is no opportunity of missing the indications that come from the global arena as well. And RBI will also, they have always balanced beautifully amongst all these parameters. And there is no doubt this will be taken into account going ahead in April also.
And that's where we leave it on the show tonight. Thanks for watching.